Hello traders everywhere, Adam Hewison here coming to you from the digital studios of MarketClub, and it is the best of times and the worst of times. I use the Charles Dickens quote from A Tale of Two Cities to really emphasize how some markets are doing well and some markets are not doing well, but there's certainly a concern going on with the markets right now. Today is a sea of red. Many markets are really under big pressure on the downside, and we're starting with the Dow. The Dow actually, out of all the indices, is probably, we've got our trade triangles, all our trade triangles are positive here, but it is beginning to look a little heavy. We've turned down a little bit in the RSI, which is a concern, but nothing to get too concerned about at the moment. Moving on to the S&P 500, this is where my concern comes in. I'm going to show you graphically just exactly what a divergence is if you're not familiar with them. And a divergence is when you have the market actually going up like this. You see how the prices are going higher and you actually go the opposite way in the momentum. We're very close to the 50 line. If we close below 50, that would not be a good sign. Now you can see our weekly is already negative right now. We think the market is going to go lower, or you should be out of the market. We've been saying that for a couple of weeks, more than a couple of weeks right now. So again, it's concern about the volatility, about what's going on in China. China's agreed they're not going to stimulate anymore, which is a big concern there. And also you've got situations with the housing starts, and you also have a worst housing start number in 5 months, which is not a good sign either. So let's move on to our next market. Pretty much the same thing with the Nasdaq. Again, we're going to show you the situation where you have prices going higher like this, and you have momentum going the opposite way. This is not a good sign. We're actually just below the 50 line on the Nasdaq, and this is definitely not a good thing. We have a negative weekly triangle. So we've been telling you for weeks to be out of this market. Actually, not a couple of weeks to be out of this market, and that's worked out well. Some of the stocks we'll be covering today, you'll see just how much they're getting pounded on the downside. So let's clear the screen. First stock, actually the first market we want to look at is just something a little bit the reverse, and that's gold. It's showing a minus 100, which is definitely not a good sign. But the one thing you want to look at in this market, in my opinion, is to take a look at the divergence. This is showing a small divergence. This low here, which corresponds to this low here and this low here. Now this low is not quite as low as this one. It's kind of almost flat, and that's also called a flat divergence. Now if we start moving up from here, this could be a sign that gold is finally bottomed out. But right now I want to watch our weekly trade triangle, because that's what we look at. When that turns green, then we'll be getting bullish and not before. First stock we're looking at is Apple. Now Apple just had a blowout weekend. They sold 10 million iPhone 6s. I'm happy for them. But the reality is we do have a weekly trade triangle here, and Apple has not made a new high. Even with all of that positive, great news that came out, actually Apple is down from where it opened. So we have a little bit of a problem with Apple. It's minus 50, meaning a trading range, and we are sort of stuck in the middle here with between 50 and 70 on the RSI. So not much to show you there, but certainly unless you're a long-term holder, very bullish, you want to just use our monthlies. But if you're an intermediate term trader, you should be out of Apple now and on the sidelines. Next stock is Amazon. Amazon, again, we've been out of this market since $330, $321 right now. Again, the weekly trade triangles tell you when to get in and out, and the monthly show you when the long-term trend is trending. And right now it's still trending for Amazon. However, the weekly is red, indicating you should be on the sidelines in this market. Plus, the other thing that's negative for Amazon at the moment, of course, Alibaba was the big news, the IPO that went off last week, but you're actually below the 50 line right here, which is not a good sign, indicating further weakness in this stock. Now, our last stock is Yahoo. Actually just gave a signal today. Remember, they were all gung-ho because they're going to get a nice piece of the pie from the Alibaba IPO. Well, that's over with now, and this stock is down almost 6.5% for the day, which is a lot. And you can see it's broken below the 50 line, indicating further weakness. Our trade triangles are mixed, indicating a trading range, but certainly on the weak side. And I would say the best place to be on Yahoo at the moment is on the sidelines. So again, the best of times, the worst of times, you've got to let the market tell you what it wants to do, because it eventually does do exactly what it wants to do. So I'm Adam Hewison for MarketClub. Thanks for stopping by. Every success using the trade triangles and positive and negative divergences. I'll see you soon.